Hello everyone, welcome back to Money and Law with Nondumiso Ntshangase. We are still doing part 2 of the video on financial statements, on what investors need to look out for. But before we get there, please note that our videos don't constitute as financial advice. If you are in need of financial advice, please consult with a person who is registered with the Financial Sector Conduct Authority. And if you are a new subscriber, welcome. We hope you do stay with us. And for the subscribers that have been here for long, I have a surprise for you in April. So April is the time when I started the channel in 2021, and in honor of our anniversary month, I'll be doing a giveaway. So please stay tuned, watch the videos till the end, because you don't know where the surprise is going to be. And yeah, so please stay tuned. We're now going to go to the video with Patricia. We were talking about a statement called, I think it's a COVID note, where they tell us what impact COVID had on companies. So please go to part 2.
Yeah, because they'll just literally say, well, I guess not in the words that we're using.
Yeah.
But they'll just say, we have sold more because of the COVID. It has impacted us positively or negatively because of 1, 2, 3.
Oh.
Maybe we made more sales.
Yeah.
But now our customers are impacted by COVID. Now, even though we've made sales, there's no cash coming in.
Oh.
So
okay,
that just literally says, don't worry, it's bad, but
it's not that bad.
Yeah.
So where would you find that note now that they've included it? I didn't even know that such information existed. I haven't really looked at financial statements in a while because I haven't really been actively buying shares. I've just been comfortable with the ones that I've got. I'm just like, if I add money, I add on the same ones that I have. I haven't been researching. So.
Yeah. So that note would fall under the section of notes. I can't really tell you where exactly it's included.
Just under notes.
Just under notes.
Okay.
Yeah.
All right. Okay, cool. Okay, so we've mentioned quite a bit. We've mentioned the going concern note. We've mentioned the dividends note. We've mentioned the new one that has come through now due to COVID, the COVID note. We've mentioned the statement of financial position, which is a snippet of what's going on with the company's finances. We've mentioned, the income
statement of comprehensive income.
Statement of comprehensive income. We've actually covered quite a number of things. So what is another important thing you think investors need to look out for?
I would say the statement of cash flow.
Okay.
That literally just talks about the cash movement of the year.
Yeah.
So that focuses on the cash itself, right? What have you purchased through cash?
Okay.
What have you received through cash?
Okay.
If you issued dividends, were they in cash?
Okay.
If you received interest, was it in cash? And on the interest part, was it in cash? Because sometimes you have an investment, you get interest, but it's reinvested. So there was no actual cash that came into your bank account.
Okay.
Right? Or it's accrued, so it's only going to be paid the following period. So there's no actual cash in that period. So the cash statement literally just talks about the cash movement. And in the cash movement, I guess for an investor, I would want to know what exactly is the cash movement affecting? What are you purchasing? Are you purchasing assets?
Okay.
Or is it just expenses? Because if it's just expenses, then that means money is just going out. But then if you're purchasing assets, then that means you are somehow also increasing the ability to generate more income through those assets.
Okay.
Or are you paying your debtors? Your creditors. So if you're paying your creditors, then that means you're reducing the amount that you owe. So that for me as an investor would also be important. Okay. What are your cash movements?
Okay. Is that where you would see the current and non-current? Is that where you find it? Because I've seen on financial statements where they will say current is it debt? Do they say current liabilities, current assets? So I know that with current assets and current liabilities, those are the liabilities you have now for that short-term liabilities. And then there's non-current, which you find, I think your property that you own as a company will be non-current.
Yeah.
Because it's something that you can realize into cash very quickly. So there's is that where you would find
no.
You find that
no. you would find that under the statement of financial position.
Oh.
So your statement of financial position, the one that just shows you the position of the company.
Yeah.
It consists of assets, liabilities, and equity.
Then they break it down
Then
to
they break it
current
down.
and non-current.
Yeah. So you would
Okay.
have your current being anything within 1 to 2 years max, and then non-current anything above the 2 years. So your property, if you've got property, your equipment, if you've got equipment, your long-term investments, your shares, if you're a company who purchases shares, would fall under the non-current. Your bank would fall under current, because that's something that is always moving up and down. Your inventories, what you're purchasing for your sales.
Stationery, things, ne?
Stationery would be your expenses.
Oh, not inventory.
No, unless if you sell stationery.
Oh.
So if you're selling stationery, then it'll be your inventory. But if you're buying stationery to use, then it's your expense.
Or inventory is what you are buying to sell.
Yes.
Oh,
so when you purchase it, that's where it stands. So let's say I've bought 50 hats. I've bought 50 hats, and the moment that I bought those 50 hats, I recognize them as my inventory, right? When I start selling them, then it becomes the amount that I've sold them for, it becomes my revenue. And the cost that I purchased them, it becomes my cost of sales. So the amount that I've sold then moves to my statement of comprehensive income. So if we had 5 hats and we've sold 3, I'm remaining with 2 by the 28th of February, right? Those 2, the value of those 2 will show in my statement of financial position as inventory. But because inventory is something that comes in and comes out, it's always current. Because we're not expecting that I'm going to have this specific inventory for the next 3 years. It should come in and go out frequently.
So I want to ask you a question that may be a little tricky, but I like this current and non-current assets thing, because let's say you've got current assets that are, because current assets, that's what you can use to pay your liabilities, your short-term liabilities. So if your current liabilities are way more than your current assets, that sort of is an indication that you won't be able to pay your short-term goals. You probably have to now go back to your non-current assets. You have to probably sell something, right? Or maybe if your sales go well or whatever, but you have to actually now realize your non-current assets in order to pay that thingy. So would you say a company that has such when you're looking at it and it looks like that, would you say it's healthy, or does it depend?
The thing about finance is it's never black and white.
So
what might look healthy for one company will be completely not healthy
for another company.
But let's assume on a retail purposes, right? And just a disclaimer, once again, this example does not mean that would apply to every single company in retail as well. Right? But let's say I have my current assets, inventories, I've got 5 shares, 5 hats worth 20 rand. Right? And then I've got my bank account, which has 2 rand. So now that means my value of my current assets is 22 rand. Okay. Then we go to our liabilities. My current liabilities. I've got creditors of 50 rand. Already, then that means I can't pay.
You can't pay them.
I can't pay them.
You can only afford 22 rand.
I can only afford 22 rand. Correct. Because my stock, even if I would sell my stock, it's not sufficient to pay that 50
So
rand.
you can still also even look at, even if they sell everything they have, are they still able to pay these creditors? And if the answer is no, then what?
Then clearly something wrong with your going concern. So do you see why the going concern note is important? Because then that means you are, if you are a human being, I'd say you're on life support. You are depending on debts to pay off your debts. It's like if let's put it on a individual basis. I have all this ABSA account, ABSA credit card, I've got my Foschini clothing account. I have my, I don't know what else, RCS account.
Yeah.
You know,
You are in debt, basically.
I am in debt. And all of my debts are 10,000 Rand.
Yeah.
My salary is 15,000 Rand. It looks good, right?
Yeah.
But I still have my expenses that I need to pay. My expenses, my rent, my water, my fuel, my whatever, it's 10,000 Rand. So if from my 15,000, I pay my expenses 10,000, I'm left with 5,000.
Yeah.
I owe these guys 10,000 Rand per month. Am I able to pay them? I'm not going to be able to pay them. So most probably, what am I going to do? I'm going to pay my credit account first so that I can take money and pay the other guys. But it's a cycle, because then that means I need to take money to pay money and put back, take money to pay money. I'm increasing my debt. So I guess at the end of the day, it's all about managing. You know, how is the company managing? And that's what you are trying to find out as
on
an
the
investor.
notes. You would find that to say, okay, we can see that our current liabilities are higher than they won't say, they will just say this is what it is.
Yes.
And then you use bonela when it's okay, am I actually accepting this or not?
Yeah. We're just gonna give you the figures. But we're not gonna say, guys, hi, here we are. You know, it'll be this figure and that figure. And then obviously the note will also explain the situation. But it would never be in a scenario of making yourself look bad.
Yeah. So still on that point about current and non-current, we've spoken about the non-current ones, which are the current ones, which are short-term, right? And then when you're now looking at the non-current ones, would it give you comfort as an investor where you can see, okay, the non-current, which is long-term, their liabilities, yes, they have a lot of liabilities, but maybe their assets are way more than their liabilities, even though maybe they might have the similar situation in the short term, but the fact that they have a lot of assets that they can probably even sell to fund this, would it give you comfort, or you still think you must always make sure that, especially, you've mentioned that it depends on what company you're running, but in a company where you do need cash flow like that to cover your short-term debt, would it give you comfort when you see, okay, but they have a lot of assets compared to their liabilities in the long term?
It depends on what those assets are. Is it an asset that I can easily sell?
Does it show on the financial statements to say the assets that the company has is maybe the office incentive? Because then if there's just that office incentive and it's billions and the liabilities are smaller, it's still, you can now sell this office because that's where you run your business. So does it show somewhere to say what are these long-term assets?
On the notes, yes.
Oh, perfect. Okay.
Yeah.
All right.
So if we've got our statement of financial positions under non-current assets, right?
Yeah.
You'll have, for example, one line item that says PPE, property, plant, and equipment.
Oh.
And that will give you a value of 2 million Rand. Then there's a reference of the note. You go to the note, it's going to show you on property, we have 1 million Rand.
Yeah.
And then equipment we have. So equipment would be things like the laptops or whatever equipment that company uses.
Yeah.
The equipment. And the other stuff would be maybe furniture and fittings and all of those things. So it will show you, it won't show you in detail what those, it's not going to say we've got 20 laptops and stuff like that. But then it's just going to give you a line item of, okay, property it's 1 million. Equipment it's 500.
Yeah.
And the other one it's 200. Then the total is that. So from there you can see, as you said, the property. You can't just sell
your property to cover your debt, because you're literally you're actually cutting your leg to try and walk.
Exactly.
You know, it's so I feel like that's such an important point. I feel like this conversation for me, I don't know about you guys, but for me, because I've said I haven't really looked at financial statements in a while, but now I'm excited knowing that these are the things I have to look out for. So, I mean, guys, we work hard for the money that we earn, and we invest it. And when we're investing it, we have to make sure that we've done proper due diligence to ensure that our money is going in the right places. So I think this is such very good information that you've given us today, Patricia, and I'm so grateful. Thank you so much for being here. It's information of value, and I'm actually quite excited to now go back when I'm now looking for a company again, to go and look at all those different nodes, and even the new one that you told me about that I didn't even know, the COVID node. I feel like, we don't know how companies have been impacted. You just think, oh, because they sell bread, they were not, but they could have been, So it's very important information, and please make sure that if you are investing in shares, look at financial statements, especially if you are, but is it called, it's called technical analysis, right? When you're actually looking at how the company is performing and whatever, look at financial statements to actually
due diligence.
To actually make sure that you are investing in something that's going to be here for longer. Because if you didn't look at the statement here, going concern, company is not here next year, what are you going to do? Your money is gone, and you probably get like half of what you put in, or even way less. So please make sure that you do. Thank you so much, my friend, for being here.
You're welcome.
I really appreciate it, and I think the subbies will also appreciate it. And it's a wrap. Bye guys, see you on my next one. We're actually gonna do one video very soon, in July, right?
And does.
Oh, she's gonna say yes, but it's we're gonna do it because she's a tax specialist as well, and we have sort of agreed in principle, even though now she's looking at me funny, but we have agreed in principle to say let's actually just take you through, especially for you that have side hustles. Some people are actually receiving money and you are not paying your SRs. We want to just go through what just before tax year, before you are allowed. I think the 1st of July, where you have to now submit. We're going to just take you through what you have to look out for. And she's a specialist at that, so she's going to really give us very good information. So cheers, guys.